Right, good morning, everyone. Welcome to our weekly Phillip Securities Research Morning Call. Today, we cover two stock counters, some technical analysis, as well as the macro sector outlook, including FAANGM Monthly, SGBANK Monthly, as well as SG Weekly. So, without further ado, I pass my time on to John.
Thanks, Max. So I'll begin with sharing on the FAANGM Monthly for August. Next slide. So overall, in August, the FAANGM declined 5%, with the Nasdaq down 5.2%. The S&P 500 was also down 4.2% for the month. Overall, Microsoft and Google were the laggards, while Meta and Netflix outperformed. Interestingly, Meta was the only company that was positive for the month of August. So we continue to see elevated inflationary pressures, macroeconomic weakness, and interest rate uncertainty, placing downward pressure on FAANGM in the month of August. And this comes after a brief relief rally in July, where FAANGM was up about slightly over 13%. Next slide. So moving on to the companies, for Meta, they actually issued $10 billion worth of bonds, which was its first bond offering. So these bonds are AA rated and come in 4 different parts. So they have a 5-year, 10-year, 30-year, and 40-year. The 40-year comes in at 165 basis points above Treasury yields. So one interesting thing about this bond offering is that there was a lot of demand. So it was about 3 times oversubscribed, about $13 billion in demand. And one of the main reasons for this is obviously because Meta has a really strong cash position. I don't think there's really any worry from bond investors about the company not paying off its debts. One of the main reasons we think that they're actually doing this is because they actually saw, or they are seeing quite a large decrease in its cash position year on year. So it decreased by about $24 billion, especially as it continues to increase its spending on the metaverse, and as well as transitioning its platform. So another the second news would be that they're actually launching a grocery delivery kind of service in India within WhatsApp. So they are Meta is actually partnering with Jio platforms to allow its WhatsApp users full access to JioMart's catalog of groceries. So what I mean by end-to-end is that WhatsApp users will be able to access the catalog on WhatsApp and purchase them and conduct a transaction all within WhatsApp. It's estimated that there are about 500 million people in India that use WhatsApp, so there's a very large market for Meta to tap on. And this comes in line with the company's kind of continued focus on increasing monetization within business messaging products like WhatsApp. Moving on to Netflix. So Netflix is actually planning a $7 to $9 ad-supported tier, or rather, they're planning out this range of pricing ad-supported tier, which comes in at about half of its regular standard plan at $15.50 on average. Just for comparison, its main competitor, Disney Plus, is also pricing their ad-supported tier at about $8 per month. So along with this price plan, the company also mentioned that they will be initially issuing a customer-friendly load of ads. So and this is at a range of about 4 minutes per hour of streaming. So they don't really want to burden the consumer with too many ads at the beginning, just for just because it's in its trial stages. In terms of the overall streaming industry, it continues to gain market share in the US. So for the month of August, they recorded 34.8% of total TV usage came from streaming. This was up 1.1% month on month. And for the first time, it actually took away the top spot from cable TV. In terms of streaming, Netflix leads all platforms at 8%, up 0.3% month on month. So moving on to Alphabet. they were actually fined 60 million Australian dollars for misleading users. They were fined by Australian regulators for misleading some of their users and breaching its consumer law with regard to personal data collection. So what essentially happened was that they told consumers that they were only going to be collecting location history. But at the same time, there was another application that was on that was called a web activity that was actually running and collecting data from its users. So this occurred between January of 2017 and December of 2018. Onto their Fitbit kind of product. So if you didn't know, they actually acquired Fitbit. I believe it was last year. So they actually announced 3 new devices ready to ship later this month. The Inspire 3, Sense 2, and Versa 4. So the Sense 2 and Versa 4 are their smartwatches. So both these smartwatches are said to have more than 6 days of battery life with a 12-minute fast charge for 1 day of full battery, 1 full day of battery use. So this kind of comes as Google continues to compete with other fitness accessory manufacturers like Apple and Garmin, as it tries to kind of tap into the steadily more popular fitness verticals. So that's it for my counters. I'll pass my time now to Max for Apple and Amazon. Thank you.
Thanks, John. So for Apple, Apple is cutting the production lag for its iPhone 14, meaning that it's producing its iPhones in India following their launch months earlier than in previous years. The iPhones produced in India will be for both domestic and international consumption. India, for now, is accounting for 3.1% of Apple's global manufacturing base in FY21, and it is expected to reach around 5 to 7% by the end of this year. Still on the iPhone, Apple launched its iPhone 14 on 7 September last week, which is an earlier launch date than in the previous models. The earlier launch date could potentially allow Apple to capture more sales during the July to September quarter. So Apple's move to produce more iPhones outside of China could actually be a sign that the company is trying to mitigate production concentration risks, especially during the current heightened tension between US and China. However, such move can pose as a challenge because Apple will need the cooperation of its suppliers to incur substantial investment to build new production plans. And in addition to that, both skilled and unskilled laborers in India may not be as available as they are in China, and India's infrastructure also lags behind those of China. Yep. And moving on to Amazon, the company is shutting down its in-house Amazon Catalyst unit, and it is planning to do so by the end of this year. The decision was made after the recent acquisition of One Life Healthcare, and Amazon also feels that the current telehealth unit is not fulfilling the needs of its potential business customers. Amazon is also adding new revenue streams for the upcoming holiday season. The company is passing on some costs to sellers that use its platform, which they call it as holiday peak fulfillment fee. These costs were previously absorbed by Amazon, but the company said that the seasonal expenses are reaching new heights. Amazon is also planning to hold a second Prime Day like event during the fourth quarter of 2022. And lastly, Amazon announced that it is buying the robo vacuum maker iRobot in an all-cash deal worth around $4.7 billion. The deal came as iRobot was struggling as it reported a 30% drop in sales in the second quarter of 2022. Overall, we feel that Amazon's move to counter inflationary pressure may be a creative way to boost its performance for the financial year, because it is taking place during the holiday season where retail sales are usually at its peak. The acquisition of iRobot will expand their smart home device offerings because it will join their portfolio of smart home devices, including like Alexa, virtual assistant, and the Ring video doorbell. Yeah, with that, I'll pass my time to Ambrish.
Thank you, Max, and good morning, everyone. So for Microsoft, there wasn't much news in August. It's just that Microsoft's pending acquisition deal of gaming giant Activision Blizzard, it might face an in-depth scrutiny by the UK's antitrust authority. The regulator had cited competition concerns in the gaming markets, mainly consoles and cloud gaming services. However, Microsoft and Activision, both the companies, they have agreed to cooperate with the regulator. But if the companies, they don't provide any acceptable solution, then the deal would be automatically referred to an in-depth investigation. Overall, we believe the demand for cloud infrastructure, Azure and Office 365 offerings, they will continue to be robust as offices reopen and companies shift to the cloud. Next slide, please. So to conclude, we remain overweight on the FAANGM. Despite the rising interest rates and inflationary pressures, the macroeconomic uncertainty, the long-term secular tailwinds for FAANGM industries, they remain intact, particularly for cloud, cybersecurity, and streaming services. Our preferred stock picks, they are still Google and Microsoft. And this is mainly because of increasing corporate demand for high-margin cloud services and productivity software tools. I would now like to pass on to Glenn for Singapore Banking Monthly. Thank you.
Thanks, Ambrish. So for the Banking Monthly, this slide, the interest rates. So the interest rates continue to increase in August, and the 3-month SOR was up 25 basis points month-on-month to 2.72%, while the 3-month SIBOR was up 51 basis points month-on-month to 2.53%. And this is the highest that the interest rates have been in over a decade. So the 3-month SOR is 128 basis points higher than its second quarter average of 1.44%, and has improved by 254 basis points year-on-year, while the 3-month SIBOR is 131 basis points higher than its second quarter average of 1.22%, and has improved by 210 basis points year-on-year. So if we look at this chart, we can also see that the red line, which is the Fed funds rate, is actually very close. So our interest rates are very closely linked to the FFR. So with another about 150 basis points rates hike expected, we could expect that our Singapore interest rates to increase to follow the FFR. So we should expect even higher interest rates moving on. So for the next slide. Another point of interest this month would be the digital banks that have started to launch in Singapore. And just a quick recap on the digital bank licenses. 4 were awarded in 2020, 2 were digital full bank licenses, and these were to Singtel and Grab and C Limited, and 2 were digital wholesale licenses, and these were to Ant Financial and Greenland Financial Holdings. So what is a digital full bank and a digital wholesale bank? So a digital full bank would serve retail customers, and they have a initial deposit cap of $75,000 for each individual. And it will also start as a restricted digital full bank, and it mainly offers simple credit and investment products. On the other hand, the digital wholesale bank, it will serve the SMEs, the small and medium enterprises, as well as other non-retail segments. It's mainly to open and maintain the deposit accounts for businesses. So there are several limitations of a digital bank, and this would include initially a 50 million cap on total deposits. They also would only have 1 physical place of business, so their main goal would be to move totally online, and no physical branches, so there will be no ATMs or cash deposit machines. The digital banks are hence more likely to focus on less capital-intensive areas like payments and remittances, distribution of third-party investments, and insurance products. So there's also the recent launch of this trust bank, which is between Standard Chartered, FairPrice Group, and NTUC Enterprise. And you might be wondering why I didn't mention it earlier under the 4 digital bank licenses awarded. So they have actually been awarded they have acquired a full bank license, hence they're not under that 4, but they are naming themselves as a digital bank. So I think it's quite similar to they're just fully online, and the only thing is that they can do more things than a digital bank, and they're less restricted. So for the next slide, please. The loans growth in Singapore, the overall loans to Singapore residents, which captures the lending in all currencies to residents in Singapore, it rose by 6.3% year-on-year in July to 838 billion. And this is tracking our estimate of a mid-single-digit loan growth for 2022 as the economies in ASEAN begin to recover from the pandemic lockdowns and borders start to reopen. The business loans grew by 7.3% year-on-year, even though business loans dipped 0.6% for the month. The loans to the building and construction segment, the single largest business segment, it grew 6.3% year-on-year, while loans to the manufacturing segment grew 10.3% year-on-year. Their consumer loans were up 4.6% year-on-year, and this was aided by strong loan demand in the housing segment. So the housing loans actually make up about 70% of the consumer lending. It grew 5.7% year-on-year. The total deposits and balances, and this captures deposits in all currencies to non-bank customers, grew by 10.8% year-on-year in July. And the current account and savings account, or CASA, proportion remains stable at 22.6% of total deposits, or 383.5 billion. So the importance of CASA, or current account and savings account, is that the banks actually hold this amount and they are able to earn interest from it while giving much lower interest to customers. So this is what we earn, I think, very, very minimal interest in our current accounts currently. So with interest rates increasing, this is sort of like a free income for the banks to earn money, and it's quite a huge amount at 383 billion Sing dollars. So next slide, please. Oh, Hong Kong loans growth. The Hong Kong domestic loans growth declined 0.08% year-on-year, so it remained quite stable, and declined 0.42% month-on-month in July. Next slide. So for the preliminary SDAV for August, it dipped 12% year-on-year to about 1 billion, as the market sentiments remain subdued due to the macroeconomic factors. The VIX averaged 22.2 in August, down from 25 in the previous month. The top 5 equity index futures turnover saw a dip of about 4.2% year-on-year to 13.71 million contracts. And this was mainly due to the lower trading volumes of its FTSE China A50 index futures and the FTSE Taiwan index futures. Notably, the MSCI Singapore index futures grew 6.9% month-on-month to 1.21 million, and the FTSE Taiwan index futures dipped 15.3% month-on-month to 1.21 million contracts. Next slide, please. So as such, we maintain overweight on the banking sector and remain positive on the banks. The bank dividend yields are attractive with upside surprises due to excess capital ratios. The rising interest rates remain tailwinds for the banking sector, and SGX is also another beneficiary of the higher interest rates. Now with that, I'll hand it over to Terence, please.
Thanks, Glenn, and good morning, everyone. Sembcorp Industries announced a strategically important sale of Sembcorp Energy in India Limited. So in terms of the terms and conditions of the proposed sale for $2.059 billion or 1x NAV, we view as fair. The purchaser is a 10-year consortium led by Oman Investment Corporation. 10-year consortium will bear the entire final purchase price through the deferred payment note, or DPN, and this will be paid over a 15-year period. The note will bear an interest of 9%. The 9% is derived by using the 10-year Indian government yield benchmark, which is at 7.2%, and includes an 1.8% spread. This 1.8% spread, there's a provision to reduce the spread if the 10-year consortium can meet certain green targets that they set for the plant. The DPN is expected to be paid off fully on the 15th anniversary of the completion of the deal. Otherwise, if there's any amount owing, the DPN will be extended for 2 years, and this will go on until the 24th year, where the DPN is expected to mature fully. That means if there's Sembcorp Industry says, in a likely scenario that there's still any amount owing by the 24th year, this will be forgiven and there'll be no additional recourse. Shareholders' approval is required for the transaction, which is expected in November this year, given the materiality of the transaction. In terms of some of the positives, the acquisition consideration implies $0.8 billion Sing dollars per gigawatt of gross installed capacity. So we got this by taking the $2.059 billion Sing dollars there, and then we divide this by the gigawatts to get 0.8 gigawatts here. So this is higher than the average comparable transactions of $0.5 to $1 billion per gigawatt in the market. So at one times NTA, we view the transaction as largely fair, given the weak market environment for coal, especially for coal-related type of assets. The second positive is the debt capitalization of the group will improve to 62% from 66% rather for the pro forma first half 22. This as SEAL is expected to be deconsolidated from its balance sheet. Sembcorp Industries will be able to use the recapitalized balance sheet to accelerate the group's transformation of its portfolio, which is announced for since 2021, from brown to green. Lastly, $700 million in receivables from SEAL is expected to be repaid within the next 24 to 48 months. The Indian Ministry of Power has recently directed Telangana and Andhra Pradesh to settle the overdue receivables within 20 to 48 months. So Sembcorp Industries expect repayment within the next 1 to 2 years. If adhered to, the group is expected to receive $700 million in receivables in the next 1 to 2 years, which again will be used to settle the proceeds from the DPN. In our next slide, in terms of the negatives, SCI, even though Sembcorp Industries will be selling off SEAL, it will still be exposed to the operational risk of SEAL for at least 15 years after the sale of SEAL. This is because even though SEAL will be deconsolidated from SCI's books after the sale from an accounting standpoint, the DPN, which is effectively a form of vendor financing, because SCI is selling it to them and receiving the DPN in return. So the cash flows from the power plant from SEAL will be used to finance the DPN. So that means that SCI will still be exposed to the operational risk of SEAL for at least 15 years, even though they have sold it. The positive thing from an ESG standpoint, of course, is that its share of net profit from sustainable solutions on a pro forma basis for first half 22 will rise to 31% from 25% previously. In terms of recommendation, we lower full year 23 PATMI by 11% as we strip out sales contribution and lower contribution from its urban development business. That said, our TP is raised to 368, still based on 1.2 times book, the average of its peers, as we roll forward our estimates to full year 23. So that's all from me for Sembcorp Industries. I'll hand over the time to Zin.
Thanks, Terence. I'll now move on to the technical analysis section. Next slide, please. So for the STI, we believe that the uptrend is set to continue as we see the breakout of the bull flag. And with that, we have a Elliott wave projection, wave 5 target of about 3,385 points. This projection, the movement of the STI was better than expected because it didn't pull back to the 50% FIBO level, which was at around 3,160 to 3,170 points. In fact, last week it broke out of this bull flag, and given the volatility contraction taking place, we are likely to see some expansion taking place in the weeks thereafter. The first resistance zone we could expect to reach is about 3,290 points to 3,300 points, followed by the next resistance at about 3,350 points to near 4,000 points. Yeah. Next slide, please. So for the S&P 500, there was a dead cat bounce rally last week, which was in line with our projection of about 4,000 to 4,060 points, as the index closed at 4,067 points on Friday. This week, we believe that the index could face some sort of resistance at about 4,106 to 4,158. Which coincides with the 50% to 61.8% Fibonacci retracement level. And this is also a resistance zone, as there was also some supply formed in August. Yeah. And there's also, in addition to that, there's also a 20-day moving average resistance at 4,107 based on the Bollinger Band. For support wise, the immediate support is about 3,900. Next slide. For individual stocks, we have 3 of them. So first one we'll be covering is Raffles Medical Group. For this, we believe that there's a potential bearish reversal pattern to the downside due to the formation of this bearish Harami pattern on the 2nd of September, formed at the 61.8% Fibo retracement level resistance and the 140 to 143 resistance area. And this actually gives us a bearish signal. Also, we saw there was bearish divergence where the relative strength indicator, RSI indicator, made a lower high despite price making a higher high at the resistance area. And this also shows that momentum is actually slowing despite the bullish price action. So with that, the price could actually reach a support level at 129 to 134. That's our first support zone, with the Ichimoku baseline providing some support before it heads to the next support zone at about 120 to 123. With the Ichimoku cloud providing support for that. Next slide. So next one is Marco Polo Marine. Similarly, we believe there's a bearish potential bearish reversal to the downside due to the formation of this dark cloud cover bearish candlestick pattern on the 6th of September. And this was formed at the confluence of the trend channel resistance at 4.5 cents to 4.8 cents resistance area, providing a bearish signal. And there was also bearish divergence observed, where the price made a higher high at the resistance area while the RSI indicator made a lower high. And this discrepancy points towards a bearish downside as momentum is slowing. So price could actually reach the first support zone at 3.8 to 4 cents before where the Ichimoku baseline provides some support before it heads towards the next support zone at about 3.4 to 3.6 cents thereafter, which was the previous breakout point of a consolidation wedge providing support. Yeah. Next slide, please. So lastly, for DBS Group, we have a buy chart for this. So we initiated a buy at 32.99, and the first target price is at 34.40. The second target price at 35.15 with our stop loss at 32.10, and the stock closed at 33.37 on Friday. So for this, we believe that the upside is set to continue, given that we broke out of a consolidation triangle. The bullish pin bar candlestick formed on the 8th of September, with the breakout of this triangle resistance at 32.70, with a bull flag prior to that, gives a very bullish signal for the uptrend to continue. Also, with the bullish crossover of the shorter 5-day moving average over the 10 and 20-day moving averages at this triangle resistance area gives a bullish upside. And this is coupled with a bullish crossover of the RSI indicator over its 14-day moving average, which further confirms the bullish signal for the price to move up. So with that, we believe that price could reach the first resistance zone at about 33.60 to 34.40 before it heads towards the next resistance zone about 35 to 36.30. Where we use the Elliott wave projection of a wave 5 target gives us about 35.15 for that. So that's all for the technical analysis section. I'll pass my time over to Paul to talk about Del Monte results and Singapore Weekly.
Thanks, Zane. So Del Monte reported their first quarter 23 results. The results were generally in line, but the headline numbers saw a loss of 30 million if you refer to the table on the left. This was because there was a 50 million one-off redemption fee because they refinanced their expensive high-yield bond with another cheaper source of funds. But because you redeem it early, then as a result, you have to pay this huge redemption fee. The other headwind for them was the currency, the weaker Philippine peso, because Del Monte reports their results in US dollars. Just a reminder, Del Monte's key business is in the United States and also in Philippines. In terms of the positives for us from the results, gross margins was maintained at almost 29%. It's higher than our model or forecast and also higher than the prior quarter. Some of the reasons, despite higher raw material costs and packaging costs, they've been able to maintain margins because of the higher prices. They raised price in June. They'll be raising price again in September for the US, and that will be their third round of price increase. The other positive for us, although not on the table on the left, was a joint venture. It turned around from a 6 million loss to a 0.7 million profit. Some of the reasons is there was been a management change, and they also disposed of their loss-making fresh fruit business. In terms of the negatives, of course, the big negative was the huge redemption fee they had to pay. So in May 22, which was already announced and flagged in our previous results note, that they'll be refinancing this expensive, almost 12% bond that they took when they were acquiring the US business a couple of years ago. So this was due 2025, but they wanted to refinance it with a cheaper source of debt. The other negative was revenue. So revenue growth was big. This quarter was a negative 1.2%. In the prior quarter, fourth quarter, there was a 14% growth. So this big deceleration in part was due to a general destocking exercise. We'll show you a chart later, but you see this destocking in some of the major retailers that was in the headlines a couple of months ago, which was such as Walmart, Target. So this impacted the US. In the Philippines was a bit more problematic because there was also a destocking, number one. They changed their distributor, number two. They did lose some market share in the juice business to Minute Maid PET bottles, which were selling at only 10 peso. And the fourth reason was just the general consumers switching away from essentials, from discretionary to more essential food. Because what hit them the most was actually their canned food business. In terms of the outlook, we still are positive on the company. I think the Monte Food, which is the US business, is riding on increased dining and preparation of meals at homes. So as consumers' wallets shrink, you see them spending more for food preparation at home. I think you see it also across some retailers like Kroger have also mentioned this phenomenon happening in the US. What is also happened for Philippines? The management actually gave a slide just to update everyone that in August you see a big rebound in their August volumes of Philippines, because the whole exercise of destocking and also change of distributor was completed. The other thing is that they're also beginning to see a slight better improvement in the macro conditions. So the swing of there should be better consumer discretionary spending by the consumers. So we maintain our buy, no change in our forecast. Our target price is 10 times PE, a discount to the industry because consumer stocks in general trade about 20 times PE, so this one's about 5 times. One of the reasons is, of course, the smaller market cap and also the higher gearing for this company. So we think the valuations are attractive at 5 times PE and 6% dividend yield. Next slide. Just to give a sense of the whole retail situation, which is not unique to them. I think a lot of US retailers and wholesalers are doing this major destocking exercise. So if you look at this table on the left, this is up to June. You can see that there's inventory to sales. So that means the amount of inventory you have, the higher the worse it is, because it means you have too much inventory compared to the amount of sales that you did the last 12 months. So you can see that the inventory, the blue line at the bottom that is more applicable to the Monte, is actually spiked up. So what we think is that during this quarter, their July quarter, there was a destocking. Likewise for department stores. The table on the right is just to show the market share. So the US continue to gain market share in their canned vegetables, canned fruit, because for meal preparation, they use a lot of canned vegetables and so forth, or even canned tomato. For Philippines, the one that hit them the most was the ready to drink juice, the -7 percentage points because of competition. So that was one that they got hit the most. Next slide. Next slide. Okay, we move on to the Singapore Weekly. So in terms of Singapore macro news, the domestic economy continues to be very robust. So in Singapore, we had retail sales ex motor vehicle. We exclude motor vehicle because motor vehicle is very volatile. But you can see that in July, retail sales in Singapore is very robust. It was +18. Last month was +20, but it still remains very strong. Most of the discretionary items was where the spending is. I guess this revenge spending in discretionary, but you can see restaurants up, apparel, and so forth. So just to give you some context how strong it is, pre-pandemic, retail sales was virtually, there was virtually no growth in retail sales in Singapore. It was probably like 0.5%, 1%. So you can see right now, year to date, 15%, we are like growing 15 times faster than pre-pandemic. Of course, probably unlikely to be that sustainable because you're talking about year on year, but it remains to a sign that domestic economy is very strong. We also have SBS Rail. So this is SBS Transit Rail and ComfortDelGro Rail numbers. You can see that there's a 50% jump following up on the July 22 50% jump. So what is happening is basically the whole rebound, the return of office and the reopening impact. So this will augur well for SBS Transit and also ComfortDelGro's third quarter results because this is the July and August number. So the third quarter is on pace for a 50% climb. Construction contracts awarded was a bit slower. So the contracts awarded, hard to do a monthly comparison because monthly is extremely volatile. But year to date, it's still down 16%. So it's, the pace of construction contracts awarded is slower. In part, we think maybe it's just that all the disruptions on the work site, which was mentioned before by Terence, dengue, accidents, and so forth. That could be a contributor. We had Jay Powell's speech in the Cato conference. So I think it's quite self-explanatory, but basically, one of the things he highlighted was that the longer the inflation remains, what they worry is inflation expectations. So once inflation expectations by the public is high, then it's very hard to curtail it or bring it back down. Then they might have to raise rates even higher. So that's why they're doing this preemptive. So in addition to the other two Fed comments, so you can expect at least a 75 basis point hike in the September 2021 meeting. So in terms of ECB also raised rates from 0 to 75 basis points, and they mentioned they plan to raise rates even further. In terms of a tactical view, we still think Tuesday there'll be some CPI, so we still think there could be some counter trend rally in the market, US market, because of the softer CPI. So the reason why we say that it's counter trend, not a longer term trend, because of two conditions before the Fed kind of pivot. So the first condition that the Fed will pivot will be, of course, CPI has to be declining meaningfully and on a sustained basis. The second condition is that it has to be on the core CPI. So from the Fed officials' point of view, CPI might come down, but it's all mainly because of oil price, commodity, and they worry the fourth quarter oil price can bounce back up again, then we're back to square one. So you need to have this condition, sustainable, and it has to be core CPI that come down meaningfully and sustainably. So you should expect new highs in interest rates, like what Glenn said. With another 150 basis point increase in interest rates this year, you should expect interest rates to rise at least another 50% to a multi-year highs, of course. So what we worry is that the REIT model can be in danger because accretive acquisitions is no longer possible. So what we mean by this is that the REIT story has always been, you buy an asset or rental yield of maybe 7% or cap rate. That means you collect rent 7%, and then you borrow at maybe 4%. Then you can make that additional 3% or to improve your cash on cash yield, which is your return on equity and so forth. But the problem is if this normalizes, so if interest rates continue to rise and your cap rate, then you cannot make any more accretive acquisition. So if you borrow at 5% and the asset give you only rental yield of 5%, you cannot acquire anything because you might as well just put in all equity because it's not worth it, because you're only leveraging the thing up. So this might actually break the REIT model, especially if they cannot grow via acquisitions. just wanted to highlight that the other thing, and right now we are having a stagflationary environment. What we mean is that Europe is probably entering to a recession, but at the same time they still have to raise rates, so it's quite very problematic there, of course. Then just a refresh, in July, then the German economic minister did say that if Russia stops the gas, it can be a Lehman moment, in the sense that it will cause a cascading effect, because if factories have to close, then it will impact other factories, smaller companies, and then you will have this whole chain reaction. So most likely, we think Europe will probably put in some fiscal spending to help some of the business most impacted by it. The main event for next week will be the US CPI. Some of the webinars we have will be, Credit Bureau Asia, which I think most of us use if you want to apply for loans, and also we have AIMS APEC. The following week, curiously, we have two STI component, or what's a component stock. We have Emperador, the new STI stock, and also ComfortDelGro. The following weeks. Yeah. Next slide. Thanks. Okay, this is just a chart. This is the Google mobility trend. So we usually track this just to see the economic activity or movement activity in Singapore. So you can see that the blue line, which is a retail, workspace is green line, is all moving back to pre-pandemic. What is lacking is still transit, that means public transport. This is just for reference. The one on the right is retail sales. So you can see retail sales is some spectacular number. It's still considered very high. Compared to, if you look at 2014, 2018, it's like 1% growth, sort of. But right now it's about 15%. Next slide. Okay, the next is just also some data we got from just to give you a sense of how the global growth is. So global, there's really no source of global growth right now. So China is in lockdown. Europe is having an energy crisis, come recession, and US is intentionally slowing down. So globally, it looks, the momentum is coming off, because the strength is in domestic Singapore. Just to give you a sense, so on the table on the left is Korea and Taiwan exports continue to decelerate. Table on the right is just the PMI numbers, which is the manufacturing and service PMIs. That means these are survey numbers by purchasing managers. Next slide. So we usually don't see this because we all talk about the Fed, but just to give you a sense of the ECB deposit rates, if you look at the bottom, it used to be 8 years of negative. That means if the banks put money to the ECB, they have to pay the ECB. So right now it's 0.75. So this should be good for the banks in Europe. But you can see that it is still a long way to catch up with this. Look at the inflation rate. So whether rightly or wrongly, but they are still have a lot of room to raise rates. Next slide. As promised, we just wanted to have a look at the impact of ComfortDelGro leaving. So I know there's a lot of numbers here, but let me just run through. So ComfortDelGro will no longer be on the STI effective on Monday. So the last trading day will be 16th of September, end of this Friday. You can see on the table on the left, so they will start 19, Emperador will be the index. Those are the lowest market cap that will be at risk if they do the quarterly, will be Keppel DC, Yangzhou. So if you want to, because nobody can exactly tell the impact, but if you look at the amount of passive funds, so if you look at the table at the bottom on the left, you can see that SPDR STI ETF holds about 10.6 million ComfortDelGro shares. The second largest ETF or passive funds is the Nikko AM. They own about 11 million shares. So combined, you can think of like 22 million shares that could be sold on the 16th. But do note that ComfortDelGro's volume has picked up. So since the second when they announced about 8 million. So most likely most of the selling from this 20 million can be absorbed. So what usually happens, we think is that the market makers will collect all these shares. Then at the end of the day, all these passive funds are not going to sell 22 million. They're just going to cross it off to the market makers, which already more or less kind of collected all these shares. Okay, on the table on the right is just to show you what happened when SPH exited. On the exit day itself, the share price was down 2%. Next slide. Then or the table on the left is just golden agri. The exit day, you can see that there was virtually no impact on the share price. Then for Hutchison Port, there was some impact. So on the day itself, that means on the 16th end of this week, we could see some weakness. So just to give you some conclusion, I mean, a lot of details here, but the exit is STI after share price weakness is 30 to 40%. So what we're just trying to say is that normally you get kicked out after your share price becomes very cheap, which sometimes is ironic, probably the best time to buy. But second thing is that on the day of the announcement, the decline can be 1 to 4%. Comfort was down 4%, and on the day of the exit, which is this coming Friday, historically the last 3 STI components was 0 to 3, right? Just to give you some sense. We still think there'll be minimal impact on ComfortDelGro because the volume was really well absorbed. There was also the Jardine strategic exit, replaced by Fraser's Logistics, but that was a bit unique because that's more due to a restructuring. And of course, since the inclusion, all 3 REITs are underperformed since they got replaced. That's just for reference. Okay, I need to go off. I can't take any questions because I've got another meeting, but we can move on to the last slide just to show the code. Yeah, thanks everyone.
Yeah, so now we'll be moving on to the Q&A portion. We'll go through some of the fundamental questions first, and then we'll let Zing take over for the technical analysis.
Yeah, hi. There's some read questions. So the first one is, do you think FLCT with significant exposure in Europe will be affected by the current economic conditions in Europe? So first of all, we do have coverage on FLCT, and FLCT has around 22% exposure in Germany, and let me see. Yeah, so the guidance that they gave so far is that they are not really affected by the Russian-Ukraine war, if that's what you're asking. But generally, the REIT sentiment is very weak right now because of the rising interest rates. So it's definitely they will be affected by some of the economic conditions in Europe. And there are a couple of questions on Prime US. So right now, Prime US, I just saw the share price is at 60 cents. It is trading at a steep discount to NAV because the NAV is about 85 cents. So it's over 20% discount. We think Prime US REIT right now, their sentiment is quite bad because of the other US REITs and especially the rising interest rates. I mean, it sounds like a broken record, but then the whole issue now with REITs is the negative carry. Like the interest rates you get are higher than the rent. If it escalates higher than the rent that you can collect, so it's called a negative carry. So it's not good for REITs at all with their business model basically collecting rent. So if you ask me what are the REITs to get, I think one of the stronger ones are Prime because they have a resilient portfolio and they are 86% hedged their debt. So yeah, Prime and Ascot are our top picks in the REIT sector. Yeah, so for that, I'll hand on to the rest of my colleagues first.
Terence, I think there's a question on Fraser's Property. Okay, I think that is unavailable right now. So maybe Zain, you can move on to sell the TA questions first.
Yeah. Okay, so I'll do some TA first. Following from Darren's coverage on Prime, I did some TA on it. It looks like it has reached some level of support. So using the Fibonacci levels, is about like 61 cents now, which is about the 50% Fibo level. That could provide some level of support. And given there was it bounced off quite a few times back in 2020, so it could be a good level of support over there. And if it goes lower, then maybe we'll find support about 56 cents, which is a 61.8% FIB level. And for short-term resistance wise, it lies at about 63 cents to 66 cents in this region over here, and upwards it will be about 68.5 cents to about 71.5 cents over here, which was resistance back in September 2020 to about March last year. Yeah. So that's for Prime. Maybe I'll just go through some more of the TA questions. So for DBS, like covered just now, it's a very nice chart. So now today it gapped upwards, but however it started to sell down a bit. But the overall trend is still looking very good. Possibly because it faces some resistance at about 33.7 over here. That's why some selling took place. But should the sellers be overcome here, we should probably see it going upwards to about $35 in the midterm to come. And yeah, so it looks very nice because it breaks out. There was a bull flag pattern. It broke out of a consolidating triangle. And then the technical indicators wise, RSI has registered a golden cross. The MACD is could be about to register a golden bullish crossover too. So yeah, that's for DBS. Then for the other local banks, starting with OCBC, it also has a pretty nice pattern. So there was a similar to DBS, the share price rally, and there was a pullback. And currently, we are facing some sort of resistance at the downtrend resistance, downtrend channel resistance over here at about 1220. So we need to observe some more candles to come, see whether this proves to be a resistance or it can be overcome. Short-term support wise, we have achieved some support at about $12 over here, $11.90 to $12. Then if we push higher, the resistance will probably lie at about 1230 to 1240 over here, or about 1250 if we feel the gap caused by a gap down in February this year. Then for the last of the trio of local banks, UOB is also looking good. It's currently still kept in a consolidating triangle over here. So there's a resistance at about $27.50 upwards to about $28. But it still looks pretty good because there was a run up before that, and if this turns out to be a bull flag, we probably could see the breakout to come to about 23.80 to 29 in the midterm, and then the upper end of the resistance could be about close to the $29.90 to $30 range over here. So if you look from the charts, right, all three banks are similar. There's some display of bullishness, but DBS is the clear leader, given that it has already broken out of the consolidating triangle over here for about 2 to 3 days really. Yeah. And okay, now I'll move on to some of the REITs. okay, Daiwa House Logistics. It looks like it could be trading in a range pattern for now. The current support is about the lower end is 61.5 cents to 61.5 cents. And recently we found some support at 66 cents. The resistance wise is probably at about 71.5 to about 74 or 75 cents around there. So the chart wise is still quite bearish, as there was a pretty large sell down, and it looks like there's a probability that we'll probably move into a range or consolidating triangle with decreased volatility. And then for the MACD technical indicator, it's close to the zero line again. So we need to see whether it achieves a bullish crossover or it continues to be rejected by the zero line over here for more signals of how the stock price is going to move. This one is HRNet. Okay, so for HRNet, I would say it's in a weak uptrend pattern. Given that it consolidated for quite a long while, spanning from July last year to about August this year. So that's about like one year period. And then it broke out of the resistance at about 76 to 77 cents, and it reached a high of 79 cents in the end of August. So now this previous resistance at 76 to 77 cents will become a support level, while the resistance is about 78.5 to 79 cents over here. And then from a technical indicator wise, when we formed the breakout, there was a bit of a higher high form on the MACD. So that suggests a uptrend, but it's a rather weak uptrend. Yeah. And then if the lower end if the support here is broken, then the lower end of the support is about 73.5 to 75 cents. And then the pretty strong support region in the mid zone will be probably about 71 cents to 72.5 cents over here. And for IBEF, chart generally is still rather weak after it broke down of this big uptrend channel. It's currently more in a descending triangle pattern over here. Then every time the strong support zone is about 61.5 cents to 64 cents over here. But we can see every time there was a bounce of the support region over here, we have been registering lower highs. So the first bounce probably we reach about 71, 72 cents. Then the next bounce we reach about 71 cents again. But however, the third bounce we only reach about 68.5 cents over here. And so the resistance is about now the resistance lies at about 66.5 to 68.5 cents over here, while the support currently is maintained at 61.5 to 64 cents over here. So this will be key to watch, given that it's about the 50% FIBO level as well. And then if we do break down, the next level is about the 59.5 to 60 cents mark over here, which is also a horizontal level also. Then the lower end is about 54 cents over here. So I think I'll just take a couple more questions, then I'll pass it back to my colleagues to answer the fundamental questions. So for Yang Zijiang, previously you formed a very nice uptrend support line over here, which could be a ascending triangle pattern. However, about 2 weeks back, it broke down of this trend line support, and it tagged to the support at about 90 cents again. Before there was a rebound rally to retest this previous support, probably turned resistance area. So the resistance probably lies at about 95 cents to 98 cents over here, given that we tested many times and it failed to break higher. And then Short-term support-wise could be the 20 MA at 94 cents, and the lower end will be about 92.5 cents. Yeah, and then the lowest end will be the 90-cent mark over here. For Samudera shipping, I covered it in my technical pulse session this morning. So I had a sell call for this. Even reason being that is currently in a downtrend channel, which is bearish, and there was also a combination pattern of a dark cloud cover followed by a hanging man candle over here, which is bearish. So it signals for some bearish reversal pattern to come. Currently, as of now, it's about $1.04. So there's probably some resistance close to 108 to 110 over here. Then the short-term support region is about 94 cents to 97 cents. 94 cents being the Ichimoku cloud support. 97 cents, 98 cents is a horizontal level. Then the lower end of the support could be at about 87 cents to 90 cents, which is a previous horizontal level previously as well. And the lower end of the downtrend channel, yeah. And for Olam Group, the chart is also bearish, given that previously there was a breakdown of the support level at about 160 to 164 over here. And then subsequently it became resistance and it was tested twice and we failed to recapture it. So the support currently is about 145, given the swing low form over here after the failed retest. And then currently there was a lower low being made at about 142, and we went back higher a bit. So probably we could be seeing a range pattern from 145 to 150 to 153. Then if the resistance remains at about 159 onwards to 164, then the lower end of the support, if this swing low breaks down, is about 138 to 140 region over here. And lastly, I'll cover Silver Lake. So Silver Lake, it has reached a support back to a support level again. So after it reached some resistance over here at about 43 cents to 44 cents, it started to pull back in this downtrend channel. And then looks like we are testing the support at about 33 cents to 36 cents region, which is a horizontal level of resistance previously last time, could turn to a level of support. And there's also Ichimoku cloud support at 34.5 cents to 35 cents over here. And for the indicator wise, we need to see whether there's a crossover of the RSI over its 14-day MA to see whether there's any golden cross, and likely the same for the MACD indicator as well, before there could any indication of a confirmation that price could reverse back to test the resistance at 39 cents to 41 cents, yeah, or the higher end at 43 cents to 44 cents. So that's all the counters I cover for now. I'll hand it back to my colleagues.
Thanks, Zin. I'll take some of the rest of the questions in the queue. Any comments on Fraser Property 4.49% green notes, please? Thanks. Our credit analyst is currently in another meeting at the moment, so I'll probably try to take a step at this. But if you want to have more, if you want to have better elaboration, you can reach out to him, Sean. So Fraser's Property, they are launching this 4.49% green notes. For those audience who are not familiar with this, there's a placement tranche and there's a retail tranche for the notes as well. The retail tranche opened last Friday and it will close on Wednesday noon. So in terms of Fraser's Property, their hospitality arm is recovering very strongly this year. And in terms of their balance sheet as well, the balance sheet is also well capitalized. Over the last 2 to 3 years, they've actually managed to reduce their gearing. Whereas for Fraser's Property, one of the main issues for Fraser's Property was their gearing was very high. So they actually managed to lower their gearing substantially. It's now just slightly above 2/3 from what it used to be 100% in terms of its gearing. So it's lowered its gearing. And for Fraser's Property, most of their interest is also hedged in a fixed rate. So in the next 2 to 3 years, they will be quite immune from the rising interest rates there. Their recent property development arm, in terms of their development arm, their recent property launch at Eden, I think that's the name, Eden at Bedok, was also 75% sold at $2,200 PSF, something like that, about 2,000 PSF, which was a little bit above estimates or what the market were expecting. I think the market was only expecting about 2,000 PSF, but I think it went slightly above. So that's a positive news for them for the property launch in Bedok. So in general, we think these properties, this bond rather, the reception will do well, mainly because the rates are good compared to the rest of the retail market, because the bond market hasn't received much of this offer. So because of scarcity value, we think that the demand for this should actually hold up when it closes on Wednesday. Yeah. So it may not be the best explanation, but if you want a little bit more elaboration, please, or if you want to clarify anything, please feel free to put it in the comment section below. Otherwise, we'll just send the question to Sean. Let me just see if there's any other questions. I think that's all the questions in the queue for me. I'll hand back the time to the rest of my team.
Yeah, thanks, Terence. I'll also take several of the questions. Sorry, Max, can you flash the poems, the screen again? I think someone asked about the link. So yeah, someone asked about the link to ask questions, which was mentioned by Paul last week. So you all can, everyone can just scan this QR code. You can join our community. So it's the Poems mobile tree app. So you can ask questions in the community pages, and we will try our best to answer as soon as possible. Yeah. Okay, so I'll jump to the questions that I have. There's one question about any views on how the rising interest rates will impact capital and investment. So for CLI, capital and investment, I think it's not just the rising interest rates. So the other things that go along with it, such as the inflation, as well as the Russia-Ukraine conflict, they have actually resulted in more circumspect behavior and higher required returns for capital investors. And this is thus limiting the assets eligible to seed funds. So I mean, this has been seen with the lower pace of capital recycling this year. And as such, capital and investments profit fell 38% for the first half. However, this is mainly due to the lower capital recycling, not just their core businesses, such as their RE investment and their fee-related income revenue has actually improved and has shown an uptick. So this they're saying that it's quite uncertain, and they're not sure what will happen in the next 6 to 12 months. But however, they do expect that the overall firm's capital deployment this year should hit a more normalized amount of about 3 billion Sing dollars as compared to last year's 11 billion Sing dollars. But they also have mentioned that our view is that the reopening of China, because now they're still under lockdowns, would be one of the key catalysts for CLI, as well as the pickup in travel. Okay, I think I have one more question. So with regards to the digital banking, and can you give a sense on what will be the impacts on the future for the 3 big banks? So for the digital banking, as I mentioned earlier, the majority of the it's still quite restricted currently. So they are capped, I think, at 50, I think it's 50 million Sing dollars. 50 million Singapore dollars cap on total deposits. So that's actually very small comparing to the three local banks. And they also do not have any physical branches, so no ATMs and cash deposit machines. And I think they are targeting towards the younger generation, and I think they have all the digital banks have come out to say that this is more of targeting the Gen Z. So the main bulk of the customers in the three banks currently will still stay with them. And so this is more for like less capital intensive areas. So more like just payments and remittances. But if you want to go and put a fixed deposit, or you want to take a loan, you would probably, a big loan, you would probably still take it with the three big banks. So they are targeting, I think they would also try to target like with Singtel and Grab's bank, they are also would be looking at financing the purchase of phones, or maybe even contracts, their monthly contracts. So that's what they're targeting. Their target audience is very different from the three big banks. And not to say that the other banks, the local banks, are not also trying to digitalize and trying to get on the trend with this digitalization. So they're all doing the same. Yeah. So I don't think the impact on the banks will be very big. I think it'll be marginal, or not even, it'll be quite negligible. Okay, I think that's all. I think hand it back to Zane for the rest of the TAs. Thanks.
Thanks, Glenn. So now I'll carry on with the TA. So and begin with Manulife. So for Manulife, the chart is still currently quite bearish. Even that is still in a downtrend channel for now, and then the immediate resistance is about 52.5 cents to 53.5 cents, and then some support is found at 48 cents recently. So that's also an immediate swing low. Then, but if we go lower, then we might retest the March lows of about 45 cents to 46 cents area over there. But from the chart perspective, the stock hasn't pulled out of a downtrend for now, and it's still currently stuck in the downtrend channel. Okay, then for Jaffa is also in a downtrend since last year. Then currently it looks to be in a descending triangle, given the higher low formed at 63 cents and 62 cents over here. Then the support is about, the key support levels is about 56 cents to 58 cents area, given that we have tested it multiple times and we receive support over there. So we probably could see price coming to support the stock at these levels. Then the resistance is about 60 cents onwards to 63 cents. But however, if we do break lower of these key levels of support, we might see the price go to the next support level at 53 to 54 cents over here, or even lower is 50 cents area. Yeah. For ComfortDelGro, despite the news of it being removed from the STI, it looks like still will be holding well. The immediate support is 136, immediate resistance 139. Then the higher end of the resistance is about 143 to 146, 147. Then the lower end of the support we could see is probably 131 to 134, or the lowest end we could see 128, 128, 129. But the trend, the range trading, it looks set to continue for now. For Golden Agri, the stock is currently still in a nice uptrend. Given that there was a rally and then we continue to sit in this uptrend channel. So for then recently it tested the support about 24, 25 cents and it was supported. Then the stock came up to a high of 29 cents. You could see the short-term support could be this the breakout of this immediate resistance at about 26 to 26.5 cents over here. Then immediate resistance wise about 29 cents to the high of 30 cents over here. Then the highest end is the 32 cents to 34 cents area over here. But the stock, the chart still looks good. The uptrend looks like it's set to continue. Yeah, with the higher lows being formed and the higher highs being formed also. So for Asian Pay TV, just let me withdraw my charts. Okay, so for this, the chart wise, is still bearish, given that we currently in this downtrend. We are currently in this downtrend channel, and then we broke down of the 38.2% FIBO support as well at about 117. Then the next support we could find is probably at 111, where there was a previous horizontal level of support. Horizontal level of resistance over here, which could turn into a support. And there's also confluence of support at the lower end of this downtrend channel over here. So we could possibly find support over there. If not, the lower, even if you go even lower, then it's maybe at 106, the 61.8% FIB level. Then resistance wise, we could face resistance at 120 to 124 area over here. And I'll cover on Untitled Financial. So for this, the weakness in the chart likely still remains over. Is still remaining. Given that we broke down of the key 39 cent level and we came out to retest over it to a high of 40 cents, but we didn't close above 39 cents. And then the immediate support is 37.5 cents. The past 2 days we came up to break above the 39 cents level again. On Friday we registered a close above it, 39.5 cents. Today we reached a high of 41 cents. So let's see where the stock closes for the today. Then the immediate resistance higher end is about 41.5 cents to 43 cents. Yeah, 41.5 cents is a more tested a few times over here. Yeah, so it's a more key level to watch. And the lower end of all the support is about 35 cents to 36 cents. Genting, it looks there's a chance for a slight bounce. Given that the previous support is about 75 cents to 76 cents over here. Then after we reach the resistance at about 82 to the high of 82 to 82.5 cents. We broke down on this bearish rising wedge pattern, and we subsequently pulled back to around between the 50% to 61.8% FIBO level, which is between 75 cents to 76.5 cents. Then we got support at 76 cents. Today we looks like we are attempting to break out this downtrend resistance line at 77.5 cents. So if we move higher, we could possibly see the stock move up to 79 cents or 80 cents for midterm supply region. Then the higher end is between 81 cents to 82.5 cents. For Gokko Land, the stock is bullish. Given that this was a previous resistance level at 165 to 169. And then after a period of long consolidation, we broke out of it last week. And we reached a high of now is about 178. So look at the historical price levels, the next immediate resistance is probably about 183 level or 184. Then followed by possibly 187. And then the higher end is about 190, 191 over there. Yeah. So the bullish momentum is still present in the stock. So let's see whether it can hit the resistance levels over there. And this previous resistance level or this previous resistance zone between 165 to about 170 will become the immediate support for the stock. For Sheng Siong, it looks still good as well. It's still being contained in the uptrend channel. So recently we hit a resistance about the high is 167, which coincides with the resistance zone at 169 last time in 2020. So it could be a double top formation over here. But the immediate support is about 152 to 156 region, given that there was a resistance over here, and then it could become a support, and then the swing low form over here is at 156. So we could possibly see the stock. If the stock is supported over here, then the uptrend might set to continue if you manage to take out this swing high over here. For Innotech, we see for Innotech is in a downtrend this year, then the immediate resistance is about 50 cents mark. Even though it was a previous support, then we broke down and we tested it recently, but we didn't go above higher than it. Then for short-term support wise, the 44 cents mark, resistance area level, then we broke out of it to become a support if we decide to backtest it. Then the lower end of the support could be at 38 cents, which is the swing low from this year. Yeah. Okay, someone asked, based on technical chart, does S&P 500 more likely to expect further downtrend? Okay, pull out my chart. Given that the relief rally tested the downtrend, this downtrend resistance line over here, right? And then we subsequently there was a pullback. And then currently it looks like we are currently in a 5-wave pullback pattern. There's a chance that some further downside might continue with a wave 5 last leg of a downtrend. And then on the big picture wise, we are still currently kept in this downtrend channel for now. So the chances of a further downtrend is still there. Yeah, especially if like this resistance were at 4,001 to 4,160, we face resistance over here and we make a lower high of this bounce, right? And then we could see the downtrend being extended. So another person asked, for TA, does it make a difference if we turn on and off the adjust data function for dividends? Will it affect the analysis retrospectively or prospectively? For this, I think the levels will just change based on the dividends. So it doesn't, then your lines will just be a bit like jumbled up a bit. Yeah. And then but the good thing is the TA won't really change because the chart will just be translated up and down based on the dividends given out. Then if you for example for Samudera, right? If you turn off the adjust function, then you probably see some gaps in your chart. But if you adjust it back, the trend is still the same. It's still showing the same thing. So yeah, it doesn't really make a difference, I feel. Okay, next I'll cover UMS. So UMS still looks pretty good, but it looks like it's possibly reaching a bit of a resistance area for now. So previously at about the 135, 136 level, it was a key support level over here, and then we broke down a bit and we extended the downtrend. Now that we coming back to test it, it might become a level of resistance over here. But overall, the midterm uptrend is still intact, given that we have higher lows and higher highs and higher lows. Then the immediate support is about 130 over here, the swing low generated over here. So if we can form sort of a consolidation over here and break out of it, then the uptrend might actually continue to test the high of maybe the 148 to 152 over here. Yeah. Yeah, I read. And so for iRead, the stock is transforming from an uptrend over here in 2020-21 to a downtrend this year. So for this, we have sort of the downtrend channel being formed. And then short-term support wise, we could find it at about 53.5 cents to 55.5 cents over here, given that there are swing lows generated. And then the lower end is probably at about 50-cent mark over here. Then the short-term resistance should be at about 57.5 cents to 58 cents, which was a support level over here that we broke down of it. So if we do retest it, it could become a resistance level, and then it also coincides with the trend channel resistance area. For Cromwell is also in a downtrend this year. Resistance wise is at about 295 to 297, $3 range over here. Then for the immediate support is about 280 over here. Then the lower end is about 266. So, but however, if there's a possibility of a bullish inverted head and shoulder pattern taking place. Let me just draw that out. So if we do manage to form the swing low here, let's say the swing low here about 280 manage to hold, right, and we break out the neckline resistance 295 onwards, then we could see the stock start to reverse higher to test maybe 320s to 330s range over here. Yeah, so there's a chance for the stock to reverse out if this happens. For Bumi Pharma, it looks like it transformed from an uptrend to a downtrend this year, and then there was also a break of a key support region. So previously the support region lies about 64 cents to 68 cents over here. Then this year we broke down of it, and then we subsequently we tested the level at 64.5 cents once, and now we look like we are testing it again. So this zone will probably be a resistance area for now. Then the short-term support wise is about this level at ranging from 54 cents to 58.5 cents over here. So if we fail the resistance over here, then we might just continue to trade in a sideways pattern. Yeah. Maybe I'll just hand over my time to my colleagues to answer some of the fundamental questions for now before I carry on with the PA later.
Yeah, thanks, Lim. Yeah, so there are a couple of questions on Capital DC. So the first one is, how long before Capital DC exits the STI? Or rather, how long must share price be depressed before it exits the index? For this, actually Capital DC is not going to exit the STI. This time around, the share that is going to make way for Emperador is Comfort Delgro. But Capital DC is the bottom three in terms of market cap. So when you're at the bottom three in terms of market cap for this STI index, right, most of the time you are in danger of being kicked out if there is a better like a better share, or a share that's better market, a bigger value rather. Yeah, so ultimately it's still based on the on FTSE, the index provider, on how they like for the rebalancing. So I think Paul mentioned Capital DC just now is they're in danger because they are the bottom three in terms of market cap. Yeah, so the next one, more share on Capital DC. Same story for Capital DC as the other REITs. For Capital DC and a lot of other data center providers, their strategy is actually inorganic growth by acquisitions. But right now, if you are getting so high a rate for your borrowing rate, like 6%, and then the cap rates are, for example, 5%, so you are actually borrowing higher than what you're getting in rent. You're paying more for borrowing than what you're getting rent. And a lot of it, we have to raise equity for acquisitions as well. So the sentiment is really not good for all these, especially if you are looking for acquisitions. Yeah, I think the rest is TA again. So I'll hand it back to Zane. Thanks.
Thanks, Darren. Carry on with the last few TA questions and end at 1 o'clock. So for city developments, the chart still looks bullish for now. We tested the resistance at $8.50 around there, and then we pulled back to form a higher low of around $8.10 over here. So we could see the price test this level again, and if we do break out, the next level to watch based on the historical level is 875, and then 875, and then the next level might be at about 920 to 940 region. Yeah. So as for CTL, next one is UOL. For UOL, it looks to be continuing to trade in a sideways direction. Given that it's in the range pattern. Then the resistance wise upwards is about 730 to 760. And then the lower end of the support is at 660 to 680 region. So the stock is just currently trading sideways. Then there was a swing low form at about 710 recently. Then we broke down of it. So that could become a level of resistance for now. Then the immediate over here. And then the immediate support for now is probably this swing low at about 690, which we tagged to. So we could possibly be trading in this range for now. For Jardine, it's still in a very strong uptrend chart here. So, and also we broke a resistance area over here at between $32.50 to about $34. And then the next resistance we could look at is possibly this area, around the $36 mark, which was a previous horizontal level over there. And even higher will probably be 37.30. Yeah. Then the immediate support wise will probably be between 32.50 over here, which is a swing low form, or the lower end could possibly be 31.60, which is a swing high over here that we broke out of. And for Yoma, there's currently a bullish descending wedge that's forming. But the chart on a longer term wise is in a downtrend. But if we do break out of this falling wedge, we could see price maybe retest the key level at 136 again. Or the higher resistance upwards is about 145 to 150 region. Yeah. Then for support wise, it looks like we currently are near the support. The support is obviously 124, I think. Yeah, 124 over here, the swing low to about 126. So this is a support region that we currently tag onto it. So we're currently lying at the support region for this stock. Yeah. For LHN, the chart looks, the uptrend looks like it's ended, and we currently is sitting in a very big range pattern for now. So the support region form is about at 27 cents to 28.5 cents over here. Then the short-term resistance, very short-term resistance in the stock can be seen at 30 cents. Swing high where we rejected over here. Then the higher end is about 33.5 cents to 36 cents. Yeah. For Wilmar, Wilmar, the trend looks like it's currently a bit bearish. Given that we tested this key level of 390 cents, right? And then ever since we formed this high at 470, we've been forming a lower high over here about 410 and 424 over here. And this level of 390 is important to hold on for the stock to continue to have a chance of trading higher. And there's also a trend line. I think there's also a trend line resistance over here. So we might see the stock come over to tag it at 410 or something, which is a key level over here. But the chart wise, it looks like still doesn't look very good for now. Yeah. For Rex, recently there was a double bottom being formed, and we broke out at double bottom for about 22 cents when we broke out the resistance at 26 cents. However, we reached a high of 28 cents and we broke down this 26 cents level. So it seems like it's rejected by this trend line resistance over here. And then for now, the immediate resistance is the 26 cents level, and immediate support is the 22 cents level. So, but chart wise is still bearish, I think, given that we are in this descending triangle being formed, and lower highs and lower lows are being formed in the stock for now. For RH petrol gas, is also similar to Rex with a descending triangle being formed. Then the support wise we've tested is about 193, 194 over here. Then the resistance can be found. The immediate resistance now is about 21.5 cents. Then the higher end of the resistance is 23 cents for now. So it looks like we could possibly be trading in a sideways direction, until we reach the end of this trendline resistance and the stock picks a direction to break out or continue to be resisted by this downtrend. Yeah. For Intera. And for Intera, it looks like it broke down of an uptrend formation with the trendline support, and currently it looks like we're trading in a rather sideways fashion for now. So currently the support is at the support is around 3.4 to 3.6 cents. The immediate resistance is 4.3 to 4.7 cents. Yeah. For PhillipCapital, yes. The chart is bullish. Given that we broke out of this key resistance at $7 over here. So at the recent level, we consolidated and broke out of it, and then we also looks like we reached the next resistance level at 740, based on the swing high in January 2018. So for now, looks like the price is consolidating for now. Immediate support is this $7 range, $7 level and psychological level. Yeah. So if the stock is still bullish if we can consolidate and continue to make higher highs. The next resistance level could be around 760, this level, or around 790 or $8. Yeah. I just answer the last A question for the Singapore stocks. The US stock, I will cover it tonight during the live counter review at 8 o'clock. Yeah. Okay, for IHX Biopharma, there was a uptrend, then it consolidated in a sideways range. However, we've broken down the key support at about 21 to 22 cents, and we just the share price just collapsed. So after that, now it's sitting at 14.5 cents over here. So it looks like we might be testing the swing low of 12.8 cents over here. So maybe 12.8 to 13 cents, we might find some support if this holds, which was the COVID level low. Yeah. But the chart doesn't look very good, and the volume has sort of like dried up also. So yeah, it's still quite bearish for now. So that's all I have. Yeah.
Yep, I think that's the end of our webinar today. Do join us for the webinars that we held for this week, and see you guys next week in our morning call. Thank you.